Morning, guys, and listen, welcome to your Market Watch for Friday, May 18th, 2018. And, okay, let's get started right away. Let's open the charts right here. The first thing we're going to look at is the Dow Jones. Dow Jones Industrial Average is 24,714. We're seeing it, it's just like I said, a while back. I said it was going to move between this range, and that's exactly where it's moving, between 27,700 and 23,000. And so it's been following right almost dead center in that range. And today's no exception. And in fact, the stock market has been kind of narrowing down. It's forming a pattern that looks like it's going to take a little bounce back up a little bit again. This is what it looks like to me right now. The type of pattern that's forming, just been forming. It's just like I don't know how to explain it. Kind of like a wedge this way and a wedge this way, and it's kind of consolidating. And it looks to me like it's going to try to bounce back a little bit. I don't think it's going to make its high, but it looks to me like it might try to bounce back a little bit to the high side where it meets resistance. That's what it's looking like it's going to try to do. Even though the bond market right now is went up a lot significantly. The stock market, the energy that this stock market had in it, because things like index investing, things like tax reform credits and stuff, these corporations bringing money in from overseas, things like the money coming in from stock buybacks and everything else. Honest to Pete, the energy that was in this market was absolutely phenomenal. And so what's happened is it's had a drawdown over a period of time here. The market is drawn down, and some of that stored energy is still there, and money is looking for a home right now. And so an awful lot of money's come out of the cryptocurrency markets, an awful lot of money, and money's looking for a home. This was a bit of a shock, this market going down. So this market could go up until it meets resistance. Resistance would be at 25,000, say, I don't know, 25,800, 25,900. It could actually go up. What would that be? Up a little bit over 1,000 points from where it is right now. This market could very well, even though the bond market is actually accelerating its pace. This means nothing to investors. Investors are really stupid. They're like cattle. Once they start to stampede, they'll stampede in one direction like a bunch of cattle or a bunch of cows, It's like a stampede. And this is the way the markets move. And so this market could actually move up a little bit, but it's not going anywhere. Now, if you know what I'm talking about by not going anywhere, I mean it's not going to go to 30,000 or anything like that. It's not going to run away, but it could actually go up a little bit before it actually falls, before we actually see the crash. But we're going to see the crash. The crash is coming in the future of this market. So what goes up has to come down. If it does go up some and meet resistance, it just means it's going to fall all the harder on the other side. Now, let's take a look at crude oil prices, 71.53. $71.53. So it's up a little bit. Crude has been going up steadily. It's getting up to the price now where there can be good profit made on opening wells that have been capped for a while, So we'll have to wait and see if a war starts or anything like that. It's going to affect the price of crude. Silver price today. Silver price today is $16.37. It's right in the middle of that low side of that lower range. There's two ranges for silver right now. There's $17 to $17.40 range up in there. That's the high range. And then there's the lower range, which is like from 1660 to down to 1610, along in there. And right now it's in that middle of that lower range that it's been running at. The lower range is when they knock it down, then it's into the lower range, and when it starts to bounce back, it goes up into the higher range, and it's been doing that for a while now. Here's cryptocurrency. Bitcoin's at just over $8,000 this morning. You probably want to know what's going to happen with Bitcoin. Well, Bitcoin is a very unpredictable beast, but I'm predicting a crash in Bitcoin coming when the stock market crashes. But until then, I think Bitcoin's going to retain some pretty good strength. You know, it could actually climb up. I've predicted it could climb up as high as 11,000 on its higher end before the stock market crashes. But it's coming for a crash, and this is going to be a golden buying opportunity for Bitcoin if the stock market crashes, and when the stock market crashes, because what we're looking at is bond yields are going to have to rise more than they are right now. This market is terribly resilient. It's because of things like what I talked about earlier, that have been pumping money into this market, and because the market is so resilient, it's going to take more energy than the Fed. The Fed's going to have to put more energy in to get this to crash. It's going to take more than I thought. But sometime this fall, when they're withdrawing $50 billion a month of liquidity out of the system, this is what propped the market up to begin with. And before the end of the year, we're going to get this crash. Now, let's take a look at cryptocurrency market capitalizations. $368 billion, 37.6% is the Bitcoin dominance. We're looking at all the numbers in the red today. Litecoin, 132 bucks. It's one of my favorite. EOS is 1241. Bitcoin Cash is 1166. Oh, Bitcoin Cash is looking good at those prices. It's really down. IOTA at 172. IOTA's looking down, really down today. And when I say looking down, I mean that's the time. That's the time, if you are into these coins and you're planning on buying these coins, the time to buy these coins is when they're looking down. When I say, hey, you know, a coin's looking down, when a coin's down in price, that's when to buy. Like Bitcoin Cash right now, down 10% at 1166. That looks like a good price for Bitcoin Cash. Tether is about the only coin that's up this morning, a little bit. Tether is a coin that really fluctuates in price, doesn't it? Let's Dash, 384 bucks. That's looking good, you know. Anytime Dash is under 400 bucks, is looking pretty good. Neo, 58 bucks. That's looking really good. $58 for Neo. I think Neo pays dividends, if I'm not mistaken. Owning Neo pays you dividends. Okay, so now we're going to move on to bonds and rates. Now, we're seeing the bond yields fall today, but this is not surprising. The reason is not surprising because we saw such a big rise. And this is what it's been doing, and this is what it's going to continue to do. It's going to take rather large, excuse me, guys. It's going to take rather large jumps upwards. Like, it's climbing like a stairs. It goes up a couple stairs, and then it'll go back one stair. And then it'll go up 2 stairs, and then it'll come back 1 stair again. And go up 2 stairs, and then come back 1 stair again. But the overall is it's going up, 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 up. And so now what it did was it jumped up, and now it's back down a little bit. That's because each time it jumps up like this, we get new buyers coming in buying U.S. Treasuries because they see that the yields are really high, and they start to think to themselves, hey, you know, they get greedy. This is what the overall predominant feature of this market has been, is greed and looking for yield. People looking for yield. And honest to gosh, I mean, they're getting greedy and they're coming in and they're buying treasuries. I don't believe that it's the government the Federal Reserve that's buying these treasuries. I believe that it's investors buying these treasuries. More fool them. I mean, they're buying from a corporation that's dead. A corporation that has got empty pockets. A corporation that I'm talking about the United States government. The United States government is over $20 trillion in debt. And if you got a corporation that's in the red over $20 trillion, and they're going to sell you basically shares, because that's basically what these bonds are, is shares in this in an indebted corporation that can never. You say, well, the United States government has a printing press. This is true, and believe me, they're going to have to use it if they're going to make these bonds whole. This is the only way. And I mean, at a certain point in time, this whole thing is just going to explode in hyperinflation. And so these bonds are basically going to only be worth the money they're printed on, which is going to be worthless too. And so to invest in them, when they could honestly, this kind of money that they're soaking into these bonds, if they were to put it into precious metals, oh my gosh, they could have something. They're not going to have nothing. They're going to invest in these treasuries because they consider the treasury the safest asset on earth, safer than gold. Huh. I mean, it's just craziness. U.S. dollar index, 93.80. The dollar's going up. This is what the last thing these people expected. An awful lot of people expected, but it's what I predicted. I actually predicted the dollar was going to go down to 91, but you have to understand something, that in the long term, I predicted that the dollar is going to make it up to at least 96, or higher than 96. And so I didn't really expect the dollar to take off this soon. I expected the dollar to linger back around 91 until the market starts to crash. But the dollar's taken off a little bit prematurely, but it's not completely unexpected because I actually predicted it would go up to about 96 during the crash, or higher. It could even go higher. This is the last big rally in the dollar until they finally destroy it. Well, thank you guys for listening to this market report. Like and subscribe, and listen, we'll catch you in the next show. Bye-bye.